In today's video, we're going to look at MicroStrategy. MicroStrategy is very dependent on Bitcoin price movements. It also has a bit of a history of overextending negative price momentum inside Bitcoin. With the Bitcoin halving coming up and MicroStrategy having $8 billion worth of Bitcoin, is this enough to overcome the sell pressure and put that massive impairment loss into perspective? Or does MicroStrategy have deep problems? One thing to bear in mind, the negative price momentum on MicroStrategy was often, if not absolutely, the right time to buy. We'll explore both fundamental analysis and technical analysis that will help you significantly. And this kind of approach can be applied to anything. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please smash that like button and don't forget to subscribe. All the indicators that I use inside the daily videos come from the service at ctksmethod.org. Let's run the numbers. MicroStrategy is a really interesting firm. It has a market cap of in excess of 8 billion and it holds 189,150 Bitcoin, which has a current market value in excess of $8 billion. Therefore, the value of Bitcoin to the market capitalization of MicroStrategy is 99.25%. MicroStrategy nearly holds 1% of the Bitcoin supply. In the run-up to the spot Bitcoin ETFs, Michael Saylor sold $20 million of MicroStrategy's shares. From filings with the SEC, this is the first time he has sold shares in nearly 12 years. A few other things to note, with the spot Bitcoin ETFs coming out, there are a lot of ways for people to invest and trade in Bitcoin. Please let me know in the comments, where do you think MicroStrategy is headed to next? A lot of MicroStrategy's attractiveness to investors was to be able to hold Bitcoin indirectly through MicroStrategy's purchases. With the spot Bitcoin ETFs, a lot of people have a lot more options now. A fairly concerning thing, MicroStrategy has a plan to dispose of 400,000 shares. We can see that investors and shareholders aren't really happy because between January 2nd to April 26, 2024, the plan is to sell as much as 400,000 shares in that period. Because MicroStrategy has such an enormous value of its market value tied up in Bitcoin. If Bitcoin comes down, we would expect MicroStrategy to come down because of that huge interdependence. We can see recently from the peak of Bitcoin's price, it's fallen over 15%. The other thing to note, MicroStrategy's stock is incredibly volatile. I've turned off the actual chart so that you can just see the volatility areas. MicroStrategy came down 68%, but then went back up nearly 114, down 65, up nearly 70, down around 75, up nearly 170, down about negative 50, but up nearly 60. You'll notice this particular area, these percentages can give people a headache. How can it go down 50% but come back up 58%? That's weird, isn't it? Not if you understand percentages. If you have something at $10, say you have $10 and you give a friend $5, you've given away half your money. If you want that $5 back from the $5, 5 plus 5 equals 10. You just increased 100%. Down 50, up 100 to stay flat. Okay, let's keep going here. Down nearly 50, up nearly 40. Down nearly 40, up nearly 140. Down 40, up nearly 85. Down around about 25, up nearly 80. Down about 35, up nearly 140. Therefore, if you're holding MicroStrategy stock, be prepared for a wild ride. There's also a really important lesson in these specific percentages. As price comes down, you want to be leaning in. You want to be boring, buying on red. There's nothing boring about the CTKS family, but you also want to be sogging. Sogging? What the heck is sogging, Ken? That's sell on green. When you're looking at buying on red, selling on green, buying on red, selling on green, buying on red, selling on green, you're going to make a bucket of money. What typically investors tend to do is they tend to sell on red, buy on green, and this puts them on the wrong side of the percentage. It takes many, many years to unwire this fact that we feel good on the green and we feel horrible on the red. You want to invert that feeling, and now we can see that MicroStrategy is coming down. How much has it come down so far? Before I do that, I'll just pop on MicroStrategy's chart so that you can see all these different areas. So that's the buy on red area, sell on green area, buy on red, sell on green. And this was a particular meltdown inside the crypto market that caused just a massive sell-off. If the crypto market is going to come into volatility, expect MicroStrategy to enter volatility as well. The question now becomes, how much has MicroStrategy come down? It's down nearly 34%. But the question is that enough? Is it enough, Michael, to come down 34%? We have to do a little bit more. We have to look into Bitcoin. We also have to do a bit of fundamental analysis on MicroStrategy. We already know the news that MicroStrategy is selling a bucket worth of shares. That's not good news. One thing that can help is the particular company from a fundamental perspective making more earnings or not. MicroStrategy will report financial year 2023 earnings on the 31st of January 2025. And what do they expect? They expect a big boost up in earnings. Average growth rates can give us an insight, especially over the past half a decade, how the revenue is increasing. Ay caramba, it's not really increasing. Net income is decreasing, as is earnings per share, by a large quantum. Also, cash flow is just getting leached from the bottom line. And there's been a big boost in capital spending. When we look at insider trading, that sounds pretty naughty, doesn't it? We're seeing all the inside trades. We can see that over the past 12 months, there's been far more sales than purchases. In terms of number, but in terms of the shares, it's fairly equally balanced. 745 is a really interesting number for the 2022 annual report of MicroStrategy. That's the number of times the word Bitcoin appeared in the annual report. MicroStrategy suffered a bit of a blow because its digital asset impairment losses, the loss on the sale of assets from a net perspective, was $1.286 billion. This hit their income statement really, really hard. That unusual expense just obliterated the profitability of MicroStrategy in 2022. One thing to keep in mind, when we look at the annual balance sheet, the fact that cash and short-term investments came down over 30%, that's not so good either. Unfortunately, MicroStrategy's cash flow statement is not looking too healthy as well. MicroStrategy has been around a really long time, in fact since 1998. What many people do when they analyze a chart, they just pick recent price action and they say everything relates to that. In terms of support and resistance levels, where is the next support level if we weren't to do recent price but we were to mark up with level 1 and level 2 standard certification through the CTKS method, these 9,350 plus days? To answer that question, we need to pop on the MicroStrategy indicator. Zooming in to recent price action, let's pop on this special indicator for this month. We can see that MicroStrategy came up into very, very strong structural resistance and it was rejected from that. Currently, there's a lot of fresh air gaps inside MicroStrategy's price structure and a tremendous amount of overhead structural resistance. This naturally exacerbates when the price comes down, it's going to fall really hard. But it will get caught at safety nets. So where are those safety nets? We can see there's a barrage of them coming up right now, from literally 439.58 up to 474.55. When you get a confluence of structural resistance lines, and especially these strong ones, that's where price starts to reverse and reflect upwards. If you're inside the CTKS method service, I want to let you know that I'll be doing a much deeper dive on MicroStrategy. I'll be playing out the CTKS method paths, that is, the normalized price path to the upside, to the neutral side, and to the downside. We would anticipate that these structural levels form a very strong buy barrier to further negative price momentum and reflect upwards. If you would like the MicroStrategy indicator of structural support and structural resistance levels, it's available now inside the service. When it comes to the majority of people who do technical analysis, they rely on just looking at recent indicative price. And if we look at recent indicative price, we would already suggest that support has been lost. What does this really mean? Let's just go in and create a bit of a thing from here to here. We're looking at 63 days worth of data. This roughly translates to about 0.67 of 1 percentage point, like it's under 1%. That's not really a lot of data to base a buy and sell decision on. What you need to do is to look at all of the data in the most statistically significant manner possible. You can see these structural levels around here don't really coincide with recent indicative price. In fact, they have no coincidence at all. RIP is very misleading. That is recent indicative price. The institutions have no interest in RIP. Only retail looks at charts with RIP analysis. That is recent indicative price. What you're seeing here is a completely different methodology. This looks at all of the price through a process called Objective Dynamic Market Structure, or ODMS. It marks up in the most statistically significant manner possible all of price history. The output from Level 1 Standard Certification and Level 2 Standard Certification are these kind of areas where you can see the price can get caught in a safety net and get flicked up. Michael Saylor has an incredible vision for Bitcoin and crypto, and always remember that the current market cap is about 99% attributed to Bitcoin. Now, what does that mean? Even though Bitcoin has had a significant write-down because of the bear market, that caused MicroStrategy to lose a lot of money on paper. It was literally a paper loss because they didn't really dispose. That means the probability of MicroStrategy going bankrupt is zero. Michael could simply sell a couple of $1 billion worth of Bitcoin if he wished to, but he doesn't. In fact, Michael wants to buy more. He wants to get over that 1% mark. And I'm sure when he gets 1%, he'll want 2. Therefore, when looking at financial statements, it's really important to contextualize things. With context, you can see that MicroStrategy has some very solid fundamentals. It can generate cash at the flick of its fingers, a click of its fingers. But one thing is for sure, Michael needs to turn around and focus on the business, focused on earnings per share, rising that up because it's not looking too crash hot at the current time. Corporate valuations are driven by earnings and therefore profitability. Free cash flow is a very important thing to keep your eye on from a fundamental perspective. Another thing to consider, these stock price targets for MicroStrategy on a current price of $4.85. The average is quite healthy, it's quite substantially above that, but you have to pay attention to structure just like the institutions do. MicroStrategy has so much structural resistance above it. It will need to break through this before it can make those highs. When looking at those stock price targets and overlaid on the current price, we can see the 791 here, the 675 there, and the 537 there. It's already below that lowest current price target. Another thing to consider, and this is a very positive thing, around the 17th of May 2024, that's about 122 days away, the Bitcoin halving will be upon us. That's when Bitcoin becomes more scarce. As it becomes more scarce, it gets more valuable. We've seen exponential increases in price after halving, so please bear this in mind. I'm sure Michael is. And we know that MicroStrategy is very correlated to the directional movement of Bitcoin. Bitcoin at the current time is coming down. MicroStrategy does tend to overreact, but it's got a lot of negative momentum in terms of inside selling as well. Therefore, let's have a quick look at the Bitcoin structural levels also from the service. When we look at Bitcoin's price action, Bitcoin had tremendous structural resistance between 46,186 and 46,757. It tried to get above there but weakened. We saw that the spot Bitcoin ETF briefly pushed it into a fresh air gap, but that was very short-lived. Then what happened next? We lost that very strong structural resistance that didn't turn into structural support. It stayed as structural resistance. It just couldn't confirm it. And then what happened? We came down to the next structural support level between 43,628 and 44,020, and it just didn't hold it. That meant that there was so much incredible selling pressure. It went down to the next safety net level. And where is that safety net level? It's between 40,795 and 41,788. Bitcoin is currently $42,500. The level of support underneath Bitcoin's current price is really important. The bears will seek to push it under that 40,800 mark to break this structural support level and turn it to resistance. However, the bulls will seek to break this $44,000 mark to liquidate the shorts and cause a massive spike up to the 46,600 mark. If this happens, we will see MicroStrategy reverse. If the bears maintain control on the market, and it's looking a little bit weak at the moment, if they get below this 40,000, say 40,700, we would expect that MicroStrategy area to at least absorb price and reflect it in the short term or consolidate it. When you look at support and resistance levels like this, you can say, oh, here's support, and that resistance is not much. But what if we were to just zoom in here and pop on the structural indicator formed through level 1 and level 2 standard certification? Let's just pop that on. What we can see is this resistance, especially structurally around the $44,000 mark, is really quite strong. It's been rejected, and when it was rejected last time, you can see that it came down to 41,522. You can also see that this structural support is reasonably light. It's not the strongest support that we would want to see. What about that upward structural resistance? How strong was that? Ooh la la, it was mighty strong. You can see that not all support and resistance levels are created equal. Just because you look at a particular band of support or resistance doesn't mean it's equally weighted. It doesn't mean it's equally strong. It really now depends on which way that Bitcoin price goes. A lot of people will promise you absolute certainty. Your certainty will come from your own actions. If someone says to you, it is definitely going here or going here, they do not understand markets, but they understand human psychology. I've heard YouTubers say, with absolute certainty, you will know where the price is going. In all fairness and all respect, that's absolute BS. The only certainty that you need to know is what you will do if price goes against you, goes for you, or goes nowhere. The certainty comes from the decisions that you make ahead of time. Price is simply bounding from one structural support level up to a structural resistance level, and so forth and so on. It's really straightforward. When people get into financial markets, they want certainty, and there's no end of people that will sell you certainty. But financial markets don't run on certainty, they run on probability. The probability is always the price is rebounding and moving between structural levels. You need to know the rules of the market, of which there are many. You also need to overcome your own psychology. If you're reacting emotionally to a buy or sell decision, you're going in the wrong direction already. This is really difficult to hear, and if it upsets you, I'm sorry for that. I'm here to let you know that after more than 30 years inside financial markets, well, really literally coming up on 4 decades, if I was told that my emotion will make me poor inside financial markets, I would have paid attention, because I certainly saw it at the early days, time and time again. If I was told, somebody had told me that the addiction to certainty will destroy your account, I would have paid attention, because that's what I was looking for. And if we go back 4 decades, the internet wasn't even around. Not like it is today. There was no YouTube. There was no way to learn from others. I can only suggest that if you're panicked or if you're angry, both of those emotions will leave you in a very bad financial position. What you need to do is to abandon emotion, abandon certainty, and if any particular influencer sells you certainty, run like hell, because they are not professional, even though their productions may be A-class. Frequently, A-class productions means D- content. Instead, you want to really focus on probabilities. What are the probabilities of Bitcoin going up or down? Hopefully you've done your cheat sheet. You're looking at the yields and the DXY, the euro dollar. You're looking at junk bonds, the S&P 500, the NASDAQ. Because you know all markets are intercorrelated and interdependent. You're applying your rules, because every time you make a loss inside financial markets, that's an opportunity to make another rule. You will get lots and lots of opportunities. Best yet, you can learn from other people's rules who have been there and done that. Mastering fear is incredibly important. A lot of times people approach financial markets because they want to get rich and powerful. Why do they want that? Because they want to be safe. They want to be financially secure. But you can have the feelings of financial security through positive excellence right now, right this minute. You don't have to wait. People say, when I become rich, I'll just be lazing around by the pool. You won't be rich for long if you're doing that. Or they can go the other way and say, when I'm rich, I'm going to control people's lives. Well, you definitely won't be rich for long. Riches and wealth come from contribution to other people. It also comes from your capability and ability to apply the rules of the market. One of those rules, when it comes to trading and investing, you must have 3 simultaneous strategies at all times. You must be certain as to your reaction. Don't give 2 hoots about what the market is doing. Worry about what you will do. If price moves against you, it goes nowhere, or it goes for you. Always remember that your synchronization factor with the market will be the determining factor on your profitability, and you cannot get synchronized if you're emotional. Always remember the universe wants you to succeed. You're engineered to have all the best of everything and to have the life that you've always dreamt of. But to get there, you need positive excellence. If you're stuck inside Zone 1 and Zone 2, you will never reach your destiny. You must get out of those zones as quickly as humanly possible. That's why we say life pullbacks give us strength for the next life rally, that we are dedicated and committed. We either win or learn and never blame. Blame is the foundation of Zone 1 and Zone 2. Zone 1 and Zone 2 is where you lose, guaranteed. Instead, through positive excellence, you embrace learning. You just do the right thing when nobody is watching. You become a person of integrity, and you enhance the integrity that you already have. Other people must feel safe with you, and the only way that they can is for you to feel safe with yourself first. Always seek to solve your problems with positive excellence. Seek to understand first. Seek to maintain, wherever possible, your inner peace and outer peace. Seek to be kind to other people. Seek to be a person of your word. Seek to kick fear out the door and let courage in. And always remember, if you're going through a life pullback, that's giving you strength for the next life rally. Don't worry about life pullbacks, they're there for you. Life happens for you, not to you. And keep on remembering the rules of financial markets. Right now, MicroStrategy is like an alt. It cannot escape Bitcoin's gravity. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.